Say hi.
Hi.
Hey, welcome back everybody to another full in-depth recap on today's live trading. Here are my trades from the past week or so live on the screen. Okay. Here was, I believe, a model 4 long live on stream. Took a short to the downside as well here. Here was another model number 3 taken with you guys live. Boom. And of course, yesterday's model number 4 long up into this old Friday key high. Absolutely bagged. And then of course, here into today, we had another classic textbook model number 3 in the market. All right. So with all this said, let's just kind of jump into everything here and show you exactly what I was looking for and how I was able to capitalize on today's trade. Even though it wasn't A+, it wasn't the best picture perfect, all stars aligning scenario in the world, but the narrative, logic, real time was attached to this. So let's go ahead and dive into that and see what that looks like. All right, first and foremost, the first thing that I had to do was reject the matrix, okay? What's the matrix? What all the sheep in the herd are doing, chasing this directional move to the downside. Now, don't get me wrong. If there was a model 4 presented, right, bearish with this move, I would have taken it. If it was a time-based move and, model 4 narrative and logic and structure was there, I would have shorted, yes. But it simply was not there today. What was in the cards was time-based real logic with my system that supported longs today to this specific time-based high here. So every single good move starts with some type of key level, and then I look to analyze what the market does from that key level. What was that key level? Right here. Okay, this is a old February 17th old daily high. If you go to the daily chart, here is that daily candlestick low, right? So I just simply map that out. Now, the thing about today is I did not know which would be the trigger point, right? Old monthly lows, old weekly lows, old daily lows, any of these levels can be very, very high quality trigger points for a classic textbook Model 3. Today, the trigger point that activated the Model 3 was this old February 17th daily low. So this is the starting point. Now I'm studying, what are we doing at this low? Well, if you take a look at it, right? Did we have any solid bodies through this old daily low here, this black line? No. Look at the candles. Ran down, closed at the low, ran up again. Large wicks back to back, ran down, closed at the low again, and then started turning back up higher against all the FOMO short sellers. Then we go down to the 15-minute chart. Once again, right down below that daily low, we come down and sweep yet another key low in the market, and this being the London low, right? Swept that from the market after we're already at a daily key level. Now I begin to identify where is going to be my obvious target if I'm actually going to be able to be supplied with a textbook Model 3. This right here immediately stands out for a very specific reason. Number one, this is a time-based key high. If you go to 930, this was the opening price here, and here was the high that was created out of the 930 opening price, and we left that behind. The 930 opening range high is the most high quality intraday draw on liquidity. So what do we have going for us here before I even drop down to entries, right? And stop loss placement. High time frame key level delivered. High quality opposing target in the market, time-based, and the narrative and logic of fading the herd that is chasing overnight shorts, right, in this breakout that hasn't even solidified solid body bearish structure yet. Now, with all this, I can finally drop down to my 1-minute chart. Okay, here's your Model 3 target, and here was your entry right here. All right, we had a huge expansion in price, right? This right here immediately pops out. Why? Because it's very strong, it's very aggressive, it's very smooth, and to top it off, which is key, it creates multiple gaps in the direction of the draw on liquidity. All right, now what's really key here though, not just the multiple gaps, when did this expansion take place? Take a look, guys. Very, very beautiful. Okay, here is your 11 a.m. hourly candle opening price. Now before 11 a.m. I wasn't really too sure on trading today because I didn't have anything light bulb yet, but that all changed when we opened up on the new hourly candle, which is why I didn't end the stream yet, because I knew we had a new hourly candle coming through. We opened up after we already came up off of a key level and already did the necessary manipulation to the downside. Now 11 a.m. just expands towards a high quality time-based Model 3 target. Boom. Here's your multiple gaps. Now real time here was like the real, I guess, new piece that I would give you guys here, right? Sometimes the market is just way too fast, right? And you're not going to get your, traditional retrace into the gaps, which is why today I didn't even require a retrace to get an entry. And let me explain why. Real time, it was just moving so fast. Order flow was drastically bullish out of nowhere. And I just kind of got that feel real time based on my, 6 years live experience. It's no joke, right? I just got that real time intuition feeling that it's like, I'm not going to get my retrace here, man. It's either I get in, at least in the vicinity of the multiple gaps and weather my stop loss down below there, or I'm not going to catch this at all. And I actually came out to be right, left every single gap open entirely, and just ran straight up into the target with great speed. So when did I enter? Very, very simple. Okay. Multiple gaps were solidified, and then we created these set of solid body down candles. Okay. This is what I utilized as my entry. As soon as we poked above that opening price, that was my entry right there at the opening price with the multiple gaps in mind. And here's the thing. As long as my stop loss placement was correct, this trade was valid. I don't have to get the perfect entry. I just have to have the systematic stop placement and the systematic take profit. Now, if you look at this trade, you're going to be like, GK, what the hell are we doing? This is negative RR. You're risking 116 handles for 93 handles. Yes. Number one, 93 handles is an amazing gain in the market. Number two, when you have a 90% win rate, RR is basically irrelevant, okay? And this isn't like it's a frequent thing. This is actually my first negative RR trade that I've taken with you guys inside of the Discord, right? But again, it all goes back to my stop loss placement. As long as I had the correct stop placement and the correct targeting, it's going to hit. Right, so I wasn't so hung up on negative RR, right? And majority of my trades on a standard basis on average is a 1 to 2 risk to reward ratio. Sometimes it's 1 to 3. In fast months, even it's 1 to 4, 1 to 5 sometimes. Today, it was just a little bit under a 1 to 1 risk to reward ratio. But once again, the stop loss placement is much more important than the entry, okay? So one more little nugget I want to add into here, okay? Not really a nugget, something you guys already know, but this right here just made the long even better, right? Referencing this 930 opening price real time, okay, all of your longs are going to be optimal below that 930 opening price. We manipulated below 930 with great aggression. We lowered it and never wanted to get short. And then we had a time-based expansion back above the 930 opening with multiple gaps. Man, there's that textbook. You want to look for this in your data, by the way, guys. Once we solidified that, I got my entry just above the 930 opening price. I won't always be perfect. The preferred Model 3 longs are going to be just at or below that 930 opening price, right? But today it was just a little bit above it, which is fine. All right, now Brian, he mentioned this real time in the stream, and I looked at it real time, and this is actually another confluence that you could have added. We have a huge regular trading hour gap. Whenever you have Model 3 and 4 logic, this can be a confluence. It's not something you want to lean on all the time, but in today's context, it gave me more confidence for longs. Why? Because of this huge regular trading hour gap. Just think about it like a unfilled fair value gap, right? You want to target that. So the fact that we had this huge unfilled regular trading hour gap above this Model 3 target here, right, honestly just made it even more high probability. It made me care less about not getting a perfect entry. All right. So that's pretty much it, guys. That'll do it for here in this session. Hope you guys enjoyed this one. See you in the next one. Peace.